Hey guys, Mike here. So I wouldn't say it was an interesting day in the market since the index has just basically kind of stayed in this little range here. And there was a little bit of news that came out that moved it down, that moved it back up and all that fun stuff. But there were stocks like Tesla, right? When we get in that wedge formation, like I said, it's going to break either way. And they finally had a nice little move today. I'll show you that one. And there's some other stocks as well that continue to break out, which we talked about. So we'll see what the upside on those are, of course. But also, what's tomorrow? Thursday. So we got 2 more days this week, and then we'll somewhat return, I guess, in a normal week. So it'll be the beginning of the year. Guys, already the beginning of the year? Oh my goodness. Next week will be the beginning of the year. I didn't even think about that. 2023 will be a wrap. So we'll start to turn into more normal flow, or start to get some volume back. Some of the big players back in it, and you'll see which way this market is really they want to start heading and everything. But a couple things I found interesting to pay close attention to is, maybe this is you as well, but it's amazing. This chart amazed me. Dividend ETF flows, right, hit a record in 2022, right? I mean, people love their dividends. Look at 2023. It's almost over. Look at that. I mean, that is lower than going any year back to 2016. And why do you think that is? Well, me not really caring much about dividends and putting the bottom, if you're one of these people that stop really putting it in these dividend ETFs, is the fact, they can get way more bang for their buck going either with, the individual stocks, individual sector type ETFs, which can move up quite a bit. And so that's about the only explanation I would have for that. But that is a major drop off, right? I mean, a major drop off. So let us know down the bottom if you're one of those folks or not. Now, the other thing we're going to be looking out for in January, and I'll talk about something else as well, it's going to affect this. I thought this was an amazing chart ran across the day. So this is S&P 500 election year seasonal patterns, and it breaks it down into all elections right there. You see that's the very dark line right there. Then open field, which is the red one. That's the one we do not want, which we do not have this year. And then sitting presidents. That's the one we actually have. And of course, the sitting president is running this year for re-election. And it looks like, it's choppy, but, you get a good, nice January to the middle of February, and then it sells off going into March right there, and then it picks back up. That would be a nice one. Of course, the red one's a disaster. That is for sure. And then all elections is kind of like, up a little bit, down a little bit. Nothing major to be looking out for. The one thing I will say about this chart, and I'll cover this when we get closer to this area, when it comes to election years, you do not want to be out of the market come November. I mean, that right there, as you see, even the red one, which is the most disaster, but you look at the black one, and I'm colorblind, but I'm guessing the other one's orange or something. You get nice rallies usually right before the election, and then especially right after it. And I've already showed you guys as well, maybe it was a members video, but the fourth quarter, by far the best. Okay, just remember, bet on greed, bet on Wall Street wanting their bonuses, all that good stuff, and trying to play catch up to make us be suckers and give them our money because they make their stuff look much better than what it actually is throughout the year. Now, the other thing to pay attention to in January, though, I know my wife and I do this, maybe you do the same, but especially people with a lot of money are definitely going to be doing this. When it comes to January, they're going to be front loading those Roth IRAs, right? Because they don't get any tax benefits for it, but you want to get the most bang for your buck, right? So you front load your Roths and then start buying in, so you have that money for the rest of the year to use it if you have that ability and stuff. So it's something else you're going to start seeing. Plus, other people are going to start putting, if they need the tax benefit, they won't contribute for the 2023 taxes until 2024 hits right before March, whatever, and they'll contribute the max, whatever it is, to their regular IRA and other things like that to get the tax benefits. So that's something else you're going to see in the first quarter, but you could see that in January as well. Now, big question is smart money still buying into this market? And supposedly, shockingly, yes, right? HYG, that's the high yield corporate bond we track, continues to buy in. Again, you can see SPY and HYG are going in the same direction. They usually track one another here. And so there is no kind of, look to say, hey, maybe there's some divergence here. Right now, there is no divergence, okay? And so they keep pushing this thing higher, and you can see HYG is even way overbought as we are right here. And you can see, right here, you can see what HYG is saying, we're getting out, and then the market makes one more big push and comes down. So even when you see the divergence, doesn't mean the SPY is going to sell off immediately or anything. It can continue to run for weeks, if not months, really. But it is just a warning sign to look for and stuff, so we'll pay close attention to that. Now, looking at some of these stocks that moved today, And guys, before we continue, please hit that thumbs up button. I really appreciate it when you guys do that for me. It helps people find the video, which a lot of new people have been. And if you like the content, think about subscribing. I appreciate all your support. And Apple really wasn't one of them, but Apple actually, in a way, didn't save the market, but with the news that came out, it turned it from red to green. As you see, it's been selling off. What's amazing, though, is the fact that this has been selling off and the market's still been going up, right? And this is why I think the S&P is having trouble, though, is because Apple and Microsoft aren't cooperating, and this is why you're seeing the Qs, the Dow, the IWM, like they're loving life right now. But if Apple and Microsoft ever get into gear, then yeah, it's going all-time highs pretty quickly, actually. But what saved it was this news right here came out that the ban they had is temporarily paused by one of the courts. And for those who don't know, they had to like pause their imports of Apple Watches into the U.S. because some international trade commission determined that it had infringed on some patent rights from another company. And so, of course, when that came out, you know, the show must go on, one of my favorite sayings. That started to get it going during lunch. Now, Tesla, big day today, broke out of that wedge formation we talked about, huge green candle, but what did it run into? It filled that 1 hour fair value gap we talked about yesterday to the penny, and also that trend line right there was above it that goes back to all-time highs. Let me show you on the weekly here. If we scroll back, that trend line right there, which, you know, we've been waiting to hit for quite a while right there, finally got up in there. And so got a rejection off that, just kind of just hovering on it right now. But again, I always tell you those fair value gaps, you know, seek them out, see if they're there. They can be a draw on liquidity. And the fact that it actually went all the way up and filled the whole thing, usually you'll get a rejection down, you'll get it to react off of it, but it did not. And you can see right there, that's where it was at today. Went ahead and mitigated that one. But I don't see any more that would actually be a draw on it over the next few days. I mean, the next one we're looking at that could be a draw up to is over 280. So again, I don't see one should bounce off of, but I'll go through all the multiple time frames to make sure, because I've showed you multiple times how it reacts off that. Now, what it could do is draw back down as it rejects off this line right here again, and use prior week's high and that fair value gap below it to mitigate that before it makes another move up. Now, when you look at the sectors here, you can see that fintech had a really good day. There's your biotech, there's your real estate. Remember, all those ones that are affected by the yields the most and the interest rates and stuff, those are still actually getting a lot of love right there. And speaking of fintech, you can see SOFI right here, nice big move up, broke through that trend line right there, which is bullish, getting in that volume gap right there. And so this one, you know, a good price target is going to be anywhere from like 12.85 to probably 13, somewhere in that area, as this continues to run, most likely, because you can see, you know, where it IPO'd at, come up, completely crash and burn. And so again, there's not a whole lot of resistance till you get around like, I guess, $12.74, $13, somewhere in there. And this had a really nice run. So again, trying to, I guess you can call this maybe a stage 2 if you want to. Again, it's still in that yellow box, so I'm not even going to call it that. We've been up here twice now at the top of that box and end up selling back down. But that will still be a nice move up if it continues. And when we pull out to the weekly, I mean, you can see you got a bullish MACD cross right there. RSI is not oversold in the weekly. And so again, this one, you know, continue to move up, and I like to see a little consolidation right there where it's at now. But again, fintech seems to be going pretty strong right now. You can see PayPal is consolidating right there. That trend line will be a beast to get through for sure. We talked about this. And you know, I mean, we know Square has been on fire and stuff like that. But the reason why it's going to be a absolute beast to get through that trend line is because when we pull this up, guess what? The 200, there it is, aligns with it perfectly. That has been a beast for any stock like this to get over. But once it does, it's going to be a launching pad for it, and it's absolutely going to move up into that RTH gap there right above it, which runs about 72. Again, you know, you're going to have an RTH gap along with a bunch of fair value gaps to mitigate along the way. But if it can break 200 moving average, excuse me, then yes, this thing is definitely going to have a nice little move up there for sure, just because fintech is still on fire. But you can also see, guess what? On the daily, it's not overbought like a lot of stocks are. And so that's why it still has some room to run. Now, Roblox is one we talked about last week. And again, this one right here finally broke above the all-time high anchor VWAP right there. And you can see just because of where it IPO'd at, there's just nothing there for really resistance at all. I mean, it crashed and burned down, but once it gets up in this gap, it's going to fill that other gap that was left during the earnings crash right there. And so this is going to have a nice run to it And you can see right there I'm talking about that anchor VWAP. Finally broke above it after rejecting off of it like 4 or 5 times. And so again, can this one have a breather? Sure, it'd be nice to have a little consolidation, set a base like PayPal's doing before it moves up. But once it moves out of this little box right here, I think this one's going to have a good 2024 unless earnings derails it, okay? Now, Shopify, talked about this one. It's got that gap right there. It's an RTH gap right there. Again, once it gets up in there, it's around the top of it. It's around 85 bucks right there. This one keeps setting new 52-week highs. And you can see kind of following a trend right there, just kind of bouncing off. And again, if you look at the RSI, there's a little bearish divergence right there. The one thing good about this one is it is actually moving up, consolidating for about a week, moving up, consolidating for another week. So it's not just straight up like a lot of these stocks are and everything. And so, you know, setting a little resistance if there is a move down or whatever. But that's how I like to see it. More of a stepping formation as it moves up. Now, once it gets up into that gap, and so let's see if this by the end of the week or even next week can get up into that gap and fill it up to 85. Again, 72 would be good support if it does decide to move back down. Now, Meta, man, only 7% away from all-time highs. Unbelievable, right? I mean, this thing was selling for, what, 90 back in September of 2022. I mean, you're talking about a V recovery, right? And what it's done here is you can see, I mean, it's basically, you see, yes, there is bearish RSI divergence, hadn't been playing out, because when we look at this, you know, on the daily and stuff, you can see what is it doing? It's sitting there setting higher highs, right, like we talked about, and higher lows. Okay, so this is a bullish structure. There's nothing bearish at all about this. And I just find it hard to believe that they have brought this one this far. I mean, big money has brought this stock this far, not to go ahead and move up another 7% over the next probably week or two to hit all-time highs. Now, what's going to happen there? Well, your guess is as good as mine. We'll see if we get. Usually, you get a rejection when you hit that level and then break through. Because I know they did get a price upgrade as well, I think, today. Now, as far as economic data, you will have your continuous jobless claims, your initial jobless claims, and there should be no other economic news that's going to affect the market at all, really, this week, honestly. And again, it's a holiday week, so, you know, don't expect much anyway. Again, next week, maybe we'll start getting more volume, kind of see where it's going to go. But, you know, as you can see, are we overstretching a lot of stocks? Abso-freaking-lutely. You know, I was thinking when on the members video I did about talking about the SP going to 52-week highs. Normally, you're not selling with the RSI going into overbought and this stretched up, trying to push through all-time highs. That kind of makes it even harder, right? And I think a lot of people are hesitant. They don't want to jump in now because they're like, I'm kind of waiting for a pullback. But every time there's a pullback, what happens? The dips get bought up really quickly. And so it is a lot riskier when you're trying to start new positions when you're way up here versus way down here. And so, you know, but again, next week we'll have a lot more clarity of where we're going and things like that. And I'm actually out of town for like 3 or 4 days out of next week, I believe it is. Yeah. And so I'll do some different kind of videos for you guys that I've been wanting to do for a while. And so hopefully you'll enjoy those and stuff. But it'll go into Roth IRAs and different kind of sectors to invest in and all kinds of stuff, as you can imagine. So anyway, hope you guys got something out of it. Hit that like and subscribe button. Really appreciate all you guys that watch, especially during the holidays. And I'll see you tomorrow.